In this week's episode of the Stockscores Market Minutes, we're going to discuss whether there is a stock market correction coming. I will show you some of the early signals of a correction. I'll then do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the day trade of the week on CRON. All right, so early signals of a stock market correction. With the way that the market has gone up since mid-October, there's a lot of people calling for a big move to the downside. And I think that makes some sense intellectually, but until it actually starts to show some signs of a correction, we should remain bullish. And I talked about that last week. Well, in this past couple of days at the end of this recent week, we've had some weakness. And so I want to show you some of the signals to watch for that indicate a correction is coming. Now, typically, a stock market correction comes when the market has an emotional blow off to the upside. That's step one. You have this optimism that pushes prices too high, and that's characterized by a move up and away from a trend line. Now, a break of an upward trend line after the formation of a falling top is a stronger signal of future market weakness. And we also want to watch different markets for signals confirming market weakness is coming. So it's not enough just to look at what the S&P 500 is doing, but is there a flight to quality into gold? Is there indications from the bond market that there is economic weakness coming? Those sorts of things. We can also, of course, watch something like the volatility index, the VXX, which shows us if there is fear coming into the market. So let's take a quick look at the daily chart of the S&P 500 ETF, SPY, and I've drawn some trend lines. Now, the first thing that you should note here is that this current trend line is linear. It is not parabolic where we've got prices running up and away from the trend line. Here we had prices running up and away from the trend line, and it came back when it hit resistance. And so ultimately that upward trend line held, but when it was overbought here, we did pull back. We've been in a very nice orderly upward trend line, but there you can see the weakness on Friday that has some people concerned, especially since there was some decent volume on that weakness. What's important to note is that the upward trend line has not been broken, so that's a positive. Number two is we have not built a falling top. Now, a falling top looks something like this. You've got a high and then a lower high, and then you ultimately would break an upward trend line. Well, we don't even have a lower high yet. So all that we really have is a couple of days of volatility, maybe a little bit of uncertainty. But given the way the market has run in the last little while, I would say at this point, there's maybe a 20% chance that we are going to see a significant market correction in the near term. Now, that percentage can go up very quickly next week if we start to break the upward trend line, if we start to build a falling top. But as of today, as I said, maybe a 20% chance that a significant correction is around the corner in the short term. All right, well, let's get into this week's market analysis. We're going to look at the charts of the S&P 500 again, and this is the shorter term chart where you can see that this upward trend line was broken on Friday. And in the very short term sense, we did have a falling top. So we've got a conflicting signal because in the very short term 30-day, 60-minute chart, we're getting something of a breakdown. But when we look at that daily chart, we still haven't broken the upward trend line. So I do think that we could see some weakness on Monday, maybe Tuesday as well, and we'll see if that upward trend line on the daily chart can hold. If it is broken, then the weekly chart gives us some answers on how far it might fall. Our weekly chart has, this upward trend line, which we saw on the daily, that's still intact. And then we have the more shallow upward trend line, which is fairly far down from where we are right now. We're looking at 330 down to 300. That's a 10% move to the downside. And so that's the potential. Now, as I said, I think as of Friday, there's a 20% chance of a major correction. But if we start breaking that upward trend line on the daily, building a falling top in the next week or two, well, then we could see that move down to 300 on the S&P weekly chart. All right, moving along. Here we have the Russell 2000, which is our small cap index. And of course, still in that upward trend. Yeah, we had a little bit of weakness last week, but we haven't hit this long-term resistance yet. I still think that there's upside. And until we start breaking down through those upward trend lines, I'm still fairly optimistic about the small cap stocks. Onto the Canadian markets, and you can see the Canadian market on Friday hit a new high but closed below its open. We have not yet broken this upward trend line or even this one. Yeah, we're flirting with it. Yeah, we're due for some profit taking, but let's wait and see what happens Monday, Tuesday before we start to get too negative. TSX Venture, or sorry, here's the longer term chart of the TSX, and you can see that we're, in this upward trend. The weekly chart is strong. It doesn't look too bad, all things considered. I still remain bullish on the Toronto Stock Exchange. Now on to the TSX Venture chart, which I have been bearish on for a very long time, and you know that if you watch these videos, but I actually think that there's some potential for this market to start to show us something, and here's why. First of all, we have a double bottom. We bottomed out here twice, 1, 2, that's our double bottom. Downward trend line has been broken, and now we're starting to build this rising bottom here. If we can make a break from this rising bottom, we may start a recovery. Now, what would motivate that? Well, we've seen a little bit of interest in the cannabis names. Perhaps they are oversold. That could drive this market higher. I don't think I would be a bull today, but it's something to watch for. This market has been really ugly for a long time, but if it can start to make some breaks from rising bottoms, then we may finally get that turn that is perhaps long overdue on the TSX Venture. On to currencies. US dollar had that breakdown a few weeks ago. It's sort of trying to come back to its downward trend line. There's the downward trend line there. So it can maybe come up for another couple weeks before it's going to hit that resistance. I'm still fairly cautious on the US dollar. However, that strength of the past 3 weeks has meant weakness in the Canadian dollar the past few weeks. Of course, partly motivated by weakness in oil, which has a strong correlation with the Canadian dollar. However, pattern is still fairly optimistic as it's building. I think it's just going to take time, but the Canadian dollar does seem to be stabilizing right now, and perhaps months down the road we may see it start to recover the underperformance that it's had for a few years. Interest rates, this is one of the important charts that I wanted to discuss this week because we had interest rates go parabolic. It pulled back to the trend line, and now it's bouncing off of the trend line. That's the bond market. That means to me the bond market is likely to go higher in the near term, which means interest rates are going lower in the near term. Now, why is that? Well, typically interest rates go lower when there is concern about an economic slowdown, because then the central banks have to provide stimulus, lower interest rates, that sort of thing. And that is one signal that we may have some market weakness coming down the road. The fact that the bond market is starting to move up like this again is maybe an indication that there is some concern about the future economic strength of the global economy. Commodities, gold is always a little bit of a hedge to market weakness, and you can see that gold went up, it made a little pullback, it broke the pullback. That's basically where the bond market is now, and it's started to move up again. I think in general you can be fairly optimistic with gold as a commodity, but with the gold charts you have to be pretty picky about which ones you take. So there are some good gold charts out there. A lot of them are a little overextended already. You want to find those that are breaking from low volatility after building a nice predictive chart pattern. And the oil chart, a couple of big weeks in the last 3. We had, of course, the big week here when tensions with Iran fell off, and then we had another big downside week last week. We're still holding this support. We're still holding the optimism, although barely. And so I think we have to be a little bit cautious. Oil should bounce in the next week. We'll see if it does, but it's still a chart that's going to take time to repair itself. It's recovering, it's trying to stabilize, but it has work to do. And finally, the fear chart. And this is where we see another indication that there's a little bit of concern that a correction may be coming. You can see that little jump in fear. You can see some pretty good volume in the VXX last week. It's like happened here, it's like happened here, it's like happened here. Sometimes you get a little run for maybe a week or two. Sometimes it fizzles out really fast. And so we want to keep an eye on this one because it is something that you can make money with if there is a market correction. If the market is moving lower, this VXX will move up, and it's a good way to make money from a correction. So for now, I would consider it something to trade for a savvy trader that watches the market very closely. But as a longer term trader, if you can't watch the market through the day, I would still shy away from this. It's just going to be too risky for that type of trader. So my ratings then, Bullish long-term still on US stocks, but I've lowered my rating to neutral. I have some concern about perhaps a little bit more weakness next week. Canadian stocks are actually holding up quite well despite the weakness in oil. Bullish on both time frames there still, although if the US market starts to correct, it'll probably drag the Canadian down with it. Long-term bullish on gold, short-term neutral. We're sort of in a little bit of a trading range in the short term. Oil neutral long-term and bearish short-term. We've had some fairly significant selling the past 3 weeks. Recent volatility shows that investors are getting concerned and are starting to take some profits from the recent rally higher. Pretty reasonable. This may be motivated by an economic slowdown, which could lead to more market weakness. However, until those trend lines start to get broken, wouldn't worry too much about that. Gold is a good hedge against market weakness, and it is showing that it is attracting investors. Oil can still gather optimism, but it has work to do. And of course, fear is rising. All right, so let's run a Stockscores market scan. So stockscores.com is my website. It has a market scan tool where you can search the market using, I don't know, 40 or 50 different filters that we have. And it allows us to find perhaps some good trading opportunities. One of my favorite scans is something called the abnormal break scan, where we look for stocks that are making abnormal price moves. We then inspect the charts to see if they have predictive chart patterns. So this week, I'm going to run that market scan. And I'm going to look at the first, I don't know, 5 or 10 stocks and just give you my analysis of each of those so that you can understand what the process is for evaluating the stocks that come up in a market scan. So let's jump over to the market scan tool now. And we're going to select here the abnormal breaks US scan. Now, because the market was down on Friday, there probably won't be a lot. And that's what maybe makes this somewhat valuable, is to go through these a little more slowly. I'm going to go through them in the slideshow view, which is a larger view. So here's one of the stocks that was actually a decent day trader on Friday, at least for the start of the day, MGEN. You can see the abnormal activity there, very strong volume, good price action. That tells us that there is something going on. It broke a downward trend line. It made a little rising bottom before it broke. The disappointing thing is it failed to close near its highs of the day. The highs of the day are way up here. It closed there, it opened there, and that is the negative sign here. So there's definitely something that had investors excited, but it didn't get much follow through. Now that may be because the market itself was weak, and so I think this is a stock to watch if you are a short-term day or swing trader. Keep this on your watch list, because the life that it showed on Friday could carry forward into next week, but I would wait for some confirmation on the shorter term chart. Go to the next one. Casa Systems, also a stock that was very abnormal on Friday. You can see the abnormal volume, the abnormal price action, breaking through resistance. A little bit volatile into that break, which increases the chance of a pullback, but it doesn't really have significant resistance until it fills that gap. So I think this stock could pull back for a few days and then start to move again. I would trade it off of the 13-minute chart, the 15-minute chart, something more of a swing trade oriented chart. If we get a little bit of a pullback and then it starts to move up again with some volume, it could be a good swing trade for that fairly nimble trader. Next up is CNSL. So here's a stock that has some issues. Yes, it had abnormal price and volume action, but look at this resistance that it's coming into. And a lot of volume traded in this price range. That's going to be supply of stock. All of these people have been losing money for months, and as the stock gets back into this trading range, they're going to want to just get out at break even. So that often limits the ability for a stock like this to move higher. I think it probably gets up into here and goes sideways. I don't consider it a great trading opportunity yet. Go through a few more. So here's Cincinnati Bell CBB. This is a stock similar to what we talked about in last week's market minutes, when a stock goes parabolic. It's just, here's your linear trend line. It gets steeper and steeper, and it really becomes a very risky situation. There may be some buyout or something here. I don't know the details of what's going on with this company, but when I look at that chart, I think that there may be some major fundamental event that's driving that. But as a trader, that's just too risky for me to consider, so I wouldn't bother with that. Do a couple more. Here's a stock that really started its upward trend when it had its abnormal activity here, abnormal volume, abnormal price, breaking from low volatility, and that started this upward trend. This stock is good to hold because it's holding its upward trend line, but to buy it up here, that's a bit of a foolish game. I would not consider that. Do a couple more. I'm not going to bother with that one. So here's a stock that had a little bit of abnormal price action, but really isn't breaking out of this pattern. It's a pennant pattern, but the price action isn't quite strong enough. So we need something a little better than that. All right, so let's jump back into the market scan or the presentation here. We're going to look at the day trade of the week. Now the market was negative on Friday, and it started to break some important support levels around noon. I think 1208 was an important breakdown. So at that point, I'm going to start looking for short selling opportunities. This is one that really fits the bill. It had pretty good support here. This is, again, the 2-minute chart. You can see it held that. This red line is yesterday's low, which is Thursday's low. And then it broke down through that from falling tops. So falling tops represent pessimism when you have falling tops in the chart. And then we have a lower boundary of what investors felt the fundamentals were worth, which was about $8.20. It broke down with an action candle, which is my proprietary indicator that I use. So that's a strong signal to go short. This is all an algorithmic trading strategy that picks these trades. So short CRON for $100 of risk required a position of 1,420 shares. That's an $11,317 position. But of course, when you're day trading, you can margin things 3-to-1. So the actual capital required to do this trade would be just about $3,800. It ended the day at a 5.57 risk reward ratio, and that ultimately was a 14.7% return on a 1-day hold. All right, well, that has been the Stockscores market minutes for, what's the date? January 27th, 2020. I hope that you've enjoyed it. If so, please click on the like button, subscribe to the channel. Most importantly, have a great week in the market and trade well.